Good morning, everyone. Once again, this is Black Forex coming to you with another pre-market analysis video. We will be looking at the USD CAD, that is the American dollar and the Canadian dollar. But before we go ahead and get started, we have to state that this video is for educational purposes only. This is not financial advice, but we know why you came to YouTube and you're looking at this material is because you want to make some money. So let's go ahead and do our best to try to give you that information that you need. All right, so right now we're looking at as I said before, USD Canada. Before we get started, as we stated in previous videos, that the USD is relatively weak due to the overall inflation being suffered by the American economy. Now, Canada currently, right now, from a fundamental standpoint, is not one of our strongest currencies, but it is theoretically stronger than USD. But Canada has not been strong enough to take price completely down. So we've been in this area of a range, and we've been in there for some time, actually. Been in this area range for some time. So it looks like we get to this general area here, bungee cord back up till we get to this general area here. Then we could balloon back down, bungee cord up, could balloon back down. So unless there is a fundamental change in Canada or a fundamental change in the USD or a fundamental change in oil, which affects Canadian price, hint, hint, then we'll still be in this range. So if Canada becomes weaker than the USD, then it from that fundamental standpoint, then a reflection on the chart should be if this is going to be a true buy, we would want to see a break in this overall range. So we would want to see a push up, a pathetic or attempt to be pushed back down within this same range, because that means that the sellers are dying, and then we would want to see another push up that breaks this entire range with another pathetic push down, because that just tells us that the sellers are gone. Then we'll go ahead and go for our buy. Let's say we see a fundamental shift in Canadian dollar in which it becomes weak, and then all of a sudden the USD starts to gain rudimentary strength. And the reason why I call it rudimentary is because it's just not going to stay weak forever, because it's weak. It's going to be periods of a weakness that it does exert strength. Okay, so if that becomes the case, then we will want to see we got our push down, a weak attempt to get pushed up within the range. Then we will want another push down that will break this entire range. Then we will want another pathetic push up. And then we can safely say that the sellers is here, the buyers are dead, and we can get in here for a short position. Okay. But there's also a strong possibility we may be continue to be bing bonging for some time. So you also have to take that in consideration too. So don't start going buy happy because it's here and you see that's what it's been doing. Don't start going sell happy just in case all of a sudden the fundamentals change that agrees with it being a sell, because it can say, yeah, it's a sell, the next thing you know, boom, this trade either hit your stop loss or you're basically in a position where you're going to crash your account. Okay. So I hope that information was helpful for you guys. Happy trading.